What's good, little fuckers? Welcome back to another trade recap. Today I'm 17, baby. And I've made no money. I'm broke as shit. But this is a whole new year for me. So this will be like a whole revelation, you know, like a New Year's I don't even know where I'm going with this. Let's just get into the trade recap. Let me explain. This will be hopefully a short video because I gotta go to bed. So let's recap what we said yesterday. Yesterday we looked on QQQ. We noticed again this bearish fair value gap that was formed here, right? Bearish PD array with the consequent encroachment here that came in this wick. And this also was a hourly fair value gap. We then took out this consequent encroachment. We also took out, we traded almost through this 1 hour fair value gap, and we traded into this 4 hour fair value gap on QQQ and then traded lower. NQ did the exact same thing. And NQ, I predicted the price perfectly. Oh my God, I can't keep doing this. Wow, NQ is just... Okay, let me explain what's going on Q. I'm pretty sure it's a weekly. Wow. So the draw on liquidity for me for this week, and I thought we were going to reach this on NQ at least in next week, but it actually reached this week. So I actually don't know what to trade tomorrow. But I had this weekly fair value gap marked out right here. Consequent encroachment. I thought price would come down here and grab it. Looks like on the daily we actually traded to it, and then today we opened up and we dumped. We're still dumping on there, which is good. We're still dumping because I have positions in my stock market game. Actually, let me look up Market Watch. Let's see if this shit works. Let me what the fuck? Boom. Log in. Let's see if this works. Sign in with Google. This one. Bro, what the fuck? What is going on, bro? Games. Oh my God. Okay. Okay, it's not loading for me. Doesn't matter. It doesn't matter. So yeah, NQ daily, obviously we're bearish. I'm not talking about today. I'm talking basically about what happened on Tuesday, right? So Tuesday was before, and this was the bullish candle that we got. So obviously we came in here. I don't know what this gray box is, but it actually taps into this like perfectly. It also trades above this 4 hour fair value gap here that was marked. So to me, that is bearish confluence because it probably grabbed some kind of order block here, or this was probably a news event or FOMC. Oh, we did have one. So that's why it went down. We had FOMC today. That's why it fucking... Oh my God. I'm so stupid, guys. I understand why it went down today. Okay, yeah. I'm just having this big revelation like right now. Oh my God, I'm such a dumbass. Anyways, yeah, daily. We have the daily high, daily low. I marked out the daily low. Far as you can see, this gets swept pretty nicely. Let's go on the 1 hour on NQ. As you can see, confluence, right, respects this fair value gap, trades back down. Where are we on Wednesday? 9:30 open, so it's like right here. So we're consolidating. We come up, we grab, let's see if there's any, yep, perfect. Look at this entry. We have London highs up here. Then New York opens. We grab, like New York is about to open right here. We grab London highs. We don't reach for Asian highs because we've already swept this. So there's no confluence for us to come back. And we haven't swept this daily low yet, so we can't even come back at all. Sweep London highs, and we dump. And so we reach into this weekly fair value gap. We bounced back off, have a move, and I believe at 2 something p.m. No, it was 4 p.m. Oh, that's why. Okay, yeah, at 4 something, Jay Powell spoke. That's why I went down so much. That's why you're seeing such a big reaction here, because this is Jay Powell. Anyways, we have probably like a 5-minute fair value gap here. This, I know damn well this probably will not hold up. Probably had some kind of reaction. Yeah, it did right there. Yeah, 5-minute fair value gap in that bullish candle. Had a little reaction, but this was, 12 p.m. and stuff, so not very. What is this? So not really a big deal here. Let's go back to the 1 hour. So that's NQ. SPX is the one I traded. And what we had was SPX, like I said last video, these highs got swept on QQQ and NQ. So basically the NASDAQ and ES too. So ES also swept these highs. What the fuck? Where the fuck? Oh, there we go. Yeah, swept these highs. So SPX had a SMT right here, divergence. That tells me, right, that price can't come back up here because we've already swept on all these 3 indices. So SPX is just going to come down. And so what happened this morning, same thing as NQ, a very nice clean chart. We have these targeted lows. Let me put this in the middle. We have these targeted what the fuck happened here? We have these targeted lows, and this is the week low and the daily low. So this is just the zone that we're targeting. And notice how close it is to like basically where we are, basically on opening price. It's very close. So the draw on liquidity was this weekly low that was down here. That was my first draw on liquidity. There's also equal lows down here, like very equal lows up here or down here. So that's also another draw on liquidity. The intraday level was this draw on liquidity, which was London lows, which we obviously have reached that. And so what happened, my entry was not at market opened, but what happened was a market structure shift. And it was the perfect like institutional order flow, like unicorn, like institutional like entry. It was the best. And so what happened was, again, we tap into this 30-minute fair value gap, probably 5-minute. Also have a higher 1 hour fair value gap here, which is turned as like a balanced price range. So if we want to see this hold up, I want to see this trade into it, but do not close. Exactly what we got on the 5-minute here. We didn't close above this gray box, if you will. We sweep London highs, and then we open down here actually, but we have this bearish action, and then we open like right around here on this candle, and that's where you can see the move down. So we've already swept these highs, so I'm not expecting a move up. We sweep, get London lows. And this is where on the 1 hour, I noticed a market structure shift. I'm not too sure why it's not marked up. But if you look, we create a swing low here. That creates a swing high. And this swing high takes out our swing low here. So this right here would be marked as a market structure shift. Wherever it is, right here. And so now what you can see, let me turn this off so you guys can see better. Now what I'm looking for is a fair value gap near this market structure shift. And I can even do what I like to do is draw my OTE, right? So from the swing high to this current swing low. So we'll do these lows down here, and my OTE would be like here. And you can see like the range is like perfectly in there. And the nearest fair value gap was, looks like there was a 5-minute. Yeah, it was a 5-minute order block, fair value gap. This was a 1 hour, pretty sure. Yeah, 1 hour fair value gap. So there's 2 fair value gaps here. The main one that was formed off this candle's low and this candle's wick high, that created the 1 hour fair value gap. Obviously, the thing is, there it's very hard to predict these moves because this candle actually traded all the way down and then it opened, traded all the way back up, created this fair value gap, right? But it didn't tap into it. So it just created it and then went all the way back down to a 5-minute fair value gap, or it might have been a 15-minute fair value gap, actually, now that I think about it. No, it's a 5-minute. So a 5-minute fair value gap. Targeted that, right, on the lows. And then what happened was this beautiful institutional tap back in fucking candle. And this is where I got in. And I was very lucky to catch this in. You see the move down? Right? Let me see on the 30-minute. The move down, huge move down, displacement, tap into this box, comes back up, and then it taps into this. Not only does it tap, you could enter just off, where is it? Off just this, right here. You could enter off here. But then, but then your risk to reward, right, you'd be, top of this box. Your risk to reward would be very lower. Now, if you were to find a fair value gap that it would want to target, which is this fair value gap, this 5-minute, you go to the 5-minute fair value gap. You could probably find like a 1-minute, but I like to do this on 5-minute. Then you draw your range, right? So you do boom, boom, then your range, and you target consequent encroachment. Now, did it reach consequent encroachment? No, it didn't really reach consequent encroachment. But what you can see on the 3-minute, and this is, if you've seen ICT talk about this while, right, you can see that it gets rejected, has a move down, and then obviously we have a pretty big displacement move. So I want to see some kind of support, or I want to see what happens here, because there is also like a fair value gap that was created here. So I want to see how price reacts to this. We get a nice little move up, and we tap right back into this 5-minute fair value gap, closing under both times, and that's where you could have entered right here. And I'm pretty sure that's what I did. My first target was this consequent encroachment. That didn't get in, and if that doesn't get in, then I don't do it. And the next thing I was looking for was obviously a retracement back. This obviously, like, understand that this price could have just dumped, like, quite literally, but there was such a big displacement, even on the 5-minute, there was such a big displacement up that I wanted to see some kind of tap back in. Closed under, right? So wicked, closed under, was like, I was waiting for this candle to show me the next candle, right? This candle, when you see this wicked, trades down, I'm like, oh shit, gets back up, gets bullish. So my next thought is like, this is going to break through. So I was waiting for that, and it didn't break through. It closed. Second ghetto, I entered right here or something. And my target, so this was interesting, because my target would have been this 5-minute fair value gap, but we already taken that out. So my obvious target was this, right? The bottom of this fair value gap. And so that was my initial target, but I had one runner left for the lows, right? And I'm pretty sure that was the monthly low. What low was this? This was definitely not a monthly low, so this was a weekly low. No, where did this low come from? Daily low? Oh yeah, it is a daily low. Just the swing low, just a swing low. So that was the target, if you will, for that swing low. And then obviously my risk to reward would be right here. Now the fact that it wasn't here, and I want you to understand why it wasn't here, why my stop loss wasn't here. It's because I had so much confluence and so much trust into this down move, and my bias was bearish, and I trust my bias now. And so if I notice that this not only did not trade above consequent encroachment on the 5-minute through the 1-minute time frame, that means that there wasn't enough buyers to buy all the way up here. And if I see that this candle closed and tapped into this 5-minute fair value gap, which we've already rejected, and it starts rejecting hard, then there's no other point of high confluence except this little tiny fair value gap. I don't see anything else pushing price back up. And so hence why I leave my stop loss right at the consequent encroachment. This way, if my bias is wrong and it starts coming back up, then I'm out of the trade, or I can easily switch it, right? Because now all I have to do on paper trading, all I got to do is just press sell, right? And I'm already in. Fuck, I'm losing, right? So all I have to do is sell, and I can easily like reverse so I'm selling and now it could be buying. So now I'm buying, you know, boom, it's that easy. So I could have done that basically. If the trade didn't go my way, I could have just easily flipped it and made some money. But that means that I got the trade wrong. That's not exactly what I wanted to do. So just to recap right here, first target here, or actually the first targets were down here, second here, and then left a runner for this one, right? So that was the trade. But what was nice, I don't find pleasure in the trade. I find pleasure in finding all this analysis and like understanding this analysis, because this took me time. And I don't think I will have time to do this tonight. I got to go to bed like right now. But we have this on SPX, and I just look at the daily and just tell me like what you think, right? So we have this weekly. Actually, no, isn't this a 4 hour? Isn't this a weekly order block? Yeah, it is. So this is not a fair value gap. It looks to be, but it's an order block, right? It's this huge bullish move. And so on the monthly, I'm pretty sure there's nothing, but there's this huge spike. And this pops out at me because look, we have this huge month bullish rally, and then we have this spike down and then spike up. So this has bullish, PD raise in it, right? So I go weekly. Okay, so weekly, does it have anything? The only thing I could notice in this monthly bullish engulfing wick was this order block, right? Because here's the wick, here's the little order block before the move up. So I'm like, price is 100% going to this. So I looked at the daily. Do we see anything on the daily before this order block, which is this consolidation? Then we have this support, which is like, okay, yeah, this works. This is also another little order block that we can mark out right here with price. But this is the targeted ones. We have like a daily fair value gap right here, right? But the thing is, we've already like basically traded into this zone, and if we close, we've basically closed under it already. So there's no need for that. Anything on the 4 hour, because you could already look on the 4 hours. Is there anything of confluence that could impact price on the last bull run? There's again this huge fair value gap that is supported here. But then again, we've already ran through that, and that 4 hour fair value gap means absolutely nothing. We basically ran through this fair value gap. I could leave it on so we could use it as a price down, but I want you to realize like we are basically 3 candles away from hitting this price target, basically 5. So my next draw on liquidity, right? Because as you can see on 4 hour, this like the spike up, spike down, consolidation, spike down, and then we're probably going to consolidate or even spike down even more after FOMC. But I'm hoping to see a closure under this 4 hour fair value gap, and I will keep you guys updated on what goes on next. All right, I will see you guys in the next video.